Let's go.
Hello, everyone. Welcome to HCM Impact, also known as Raising the Tide. This is a weekly series of videos and podcasts where we discuss material changes to the world of work with a particular focus on human capital reporting. What makes this video series unique is that we're bringing together true global experts. These are people who have been instrumental in developing or working on bringing human capital reporting standards to fruition. My name is Brad Boyson. I'm your host, and I'm one of the members of the HCM Impact Raise the Tide group. And our guest today is Karl Craven, joining us from the UK. Welcome, Karl.
Hi, everybody.
And for those who may not know you, Karl, maybe if you could just give us a little bit about your background and maybe prelude into how you got involved with the ISO standard on human capital reporting, ISO 30414.
Okay, no problem. Thank you, Brad. First and foremost, I'm a HR professional. I've worked 20 plus years in international HR, which is really like regular HR, but with expats and mobility issues and local national issues and stuff like that. Primarily in the oil and gas sector is where I've worked in some really interesting environments. I started off in the UK, then to the US, then off to Afghanistan. And since then I moved around North Africa and West Africa. I had a lovely spell in Cape Town for a while, and most recently was out looking after the Middle East region for a Hungarian oil and gas company based out in Pakistan. And
That's
it was in
global.
Yeah, I mean, I made a single man's career out of it. Now I'm married with 3 children, so is no longer able to do that. So now I'm based in the UK. But whilst I was out in Pakistan, I did my SHRM SCP qualification. And I was fortunate enough to meet Zahid Mubarak, who, as we'll discover through these podcasts, is integral in the development of the ISO 30414 standard. Now, I initially met him not knowing the gravity he brought to this area, and he just mentioned to me that there was this ISO standard that they were looking at internal and external reporting. And for me, that was what triggered it, because I was terrible at doing internal reporting. So my head office was asking for monthly headcount, monthly reports, and wanted me to do something, a format for them going forward. I didn't know where to start. So I had some metrics resources back from the conference board for 2005. They did a really nice piece with Info HRM, but there was so much metrics on there that I didn't know where to start. So Zahid had mentioned to me, look, we're doing a training course. Would I be interested? You know, ISO is all about standardization. I thought it was very interesting to see how you can standardize human beings, because, you know, that's the most difficult commodity to standardize, really.
Yeah.
So I did the training course with him 2019, 2019, during the pandemic year, I would say. And following that, I obviously made a good impression. I went on to start teaching the course for Zahid. And so I got very involved at that point. What interests me initially was about reporting, but then once I got to discover more about the standard, I believed in the mission. I believed in why it's important, and I've just got involved with the various networks since then. And HCM Impact is one of those networks.
It's interesting that you mentioned, that one of the values you saw was internal reporting. Is that correct? Yeah.
Yeah, and I still see the value in internal reporting. There's a lot of talk in this field about certification of organizations, and from being an operational HR person, that's not really what attracts me. That may be a happy byproduct. I mean, in the UK, we've had investors in people qualification going around for a long time. And that sort of muddied the waters in getting these external badges to say you're a good employer a little bit. You know, it was a very convoluted, expensive process. So I don't see from a commercial perspective that the real value is in the certification side of it. I see it in the actual using the set of metrics that are agreed as a consensus group of metrics, and start to look at how you operate as a business and how you can now start articulating with evidence-based facts to your management team and start looking at the heart, the under the engine aspect of your business using these metrics. And I would like to see in the future that you don't just report on the external metrics. So, I mean, I'm assuming you'll introduce the audience to what ISO is, but it's applicable to large organizations and small to medium organizations. And there's a series of 58 metrics, and you can argue there's probably more metrics within there. So maybe 65, 64 metrics, but only 23 of them are externally reportable for large organizations, or 10 of them for small organizations. So for me, the real value lies in the internal whole suite of metrics, because looking at that, it shows you the whole dynamics of the system. And for various reasons, you might not want to publish those externally from a competitive edge kind of point of view, confidential point of view. But I would have liked to have seen that, in the future, that we are reporting all 58 plus more. I mean, we take a look at one of the areas on diversity, is one of the human capital areas. It asks you to report on 3 kind of areas: gender, age, and disability. But if you look at other standards out there, there's I get the right quote, is the GDIB, Diversity and Inclusion Standard, that has 28 definitions of diversity. So, I mean, this is just really about reporting the bare minimum, and you could go further than that, really.
Well, it's interesting to hear, again, to hear your focus on the internal reporting, because in a sense, that's always been there. Organizations have had the ability to, define their metrics and measure. And I think back to my initial academic training in finance, and learning that, well, there's, financial accounting, there's management accounting, there's income tax accounting, there's probably others that I haven't heard of as well. And they're all valid. And I think what is interesting for a lot of people who work in HR is that we've never really sort of had these flavors of human resources. And when you bring in things like metrics and measures, and as you said at the outset, this idea of sort of standardizing the work of people, a lot of people are just in principle against that idea. They just say that's not possible, or that's not what HR or human capital should be doing. How would you address that? What would be your comment back to those people?
Look, as a HR person, I've worked from the bottom upwards in organizations, and maybe I haven't gone high enough in the organization to know what's happening above me. But I was very angry when I started learning about the standard, that my peers, my bosses, hadn't focused my attention on metrics and reporting and the value that can bring. Because when you start going down this corridor, there's so much to it, and it's a real enrichment area for HR to learn more about. And I think that I've worked in third world kind of developing markets, so maybe I've been outside of the system a bit, and maybe I do discredit to people in the UK who are maybe advanced in this areas. But I feel like that, yes, we had turnover, time to hire metrics, and recruitment would have their metrics and things like that. But we didn't really look at the whole suite of metrics that the ISO is bringing. And well, there is research out there that there's over 900 metrics out there in the market, so, when we come to talk about it, the ISO standard, where that adds real value is in having a consensus that we can all use the same formulas and the same definitions. And we report the information, whether that be internally or externally, in a uniform, universal way. So
to your point earlier, it reminds me a lot of mission statements, right? And I think it was Peter Senge who once said, the value of a mission statement is not having one, it's the doing of it. And, that's part of the balancing act that I think we all have with these standards, is that, you can measure things for compliance and tick a box and, no one revisits it again. Or, for certain things that are really high value added activities, it's like that classic expression, that which gets measured gets managed. And for years, HR people have sort of unilaterally decided what they measure. And, the idea of having a standard vocabulary, again, as someone who studied finance first in their business academics, is just so fundamental in terms of being professional, because one of the things that you want to take away from this is the personal nature of it. It's like that expression, it's nothing personal, it's business. And when you start saying evidence-based HR people practices, really what you're trying to say is, let's take out the biases, let's take out the noise, let's take out the politics and look at what's best for the organization, for the people, for the stakeholders, and move in that direction. And when you get that kind of commitment amongst people, you start to realize how far away many organizations are from operating in that kind of mindset.
Yeah, I mean, I reckon this kind of set suite of metrics, this is looking at the whole life cycle of the organization, from hiring through to internal mobility to exiting the organization, looking at the finance side of it. It's cross-functional, it's bringing in legal, it's bringing in HSE, it's bringing in finance, and bringing them all together with the same figures and same facts. I reckon that kind of stuff has been around for a long time. If you look at mergers and acquisitions, if you went into a data room of an organization and you wanted to look at the really what's going on in that organization, I'm sure there's tools that's been used. But I don't think the HR professional, in my mind, has used the whole suite of metrics to drive their strategy and look at trend analysis. I mean, there is dashboards and scorecards that you can use in predictive analysis. I can't say for everyone, but as a general industry, I don't see that HR has done enough or puts enough value in it. We recently did a review of it, and we felt like this area is an unconscious incompetence for HR professionals. What they don't know, they can't value, really. So why I like being part of the Human Capital Impact Group, it's all about raising awareness.
Yeah.
We have an internal thing, raise the tide, and the concept of that is that all boats float in a raising tide. We all coming to this from different aspects. Maybe we're investor side, or we're finance side, or HR, or like myself, a consultant. We want to make some money out of it in a sense, but at the same time, we really believe in this standard that it's going to do good for society. Bring transparency to organizations, pull back the sheets to reveal what's actually going on in an organization.
Here's a question for you, and I don't mean to put you on the spot, but one thing I've found when I have these discussions is if I have any personal or real world stories where I've gone to a metric or measure or some analytics to help make the case for an HR, initiative, a business case, if you will. Do you have any examples in your work experience where you've done something similar that you can share with us, and how the value of measuring enhanced what you're trying to achieve?
Not so much related to the things that are in the standard. So I can't.
Fair enough. Yeah.
Pull out a time to hire kind of story and tell you that I've reduced the days to hire, and this has had a £200,000 valuation benefit. But I have worked with organizations where I've started from a whole business transformation process where we've looked at putting in place talent management systems that addresses competency development and putting people in structured job families and career families. And on the basis of that, we put in place a methodology called the end salary methodology, which takes where you are in the pay group, and depending on your appraisal rating, moves you at a certain speed to where we think you should be. Higher performance above the midpoint and lower performance below the midpoint, for example. And in that process, we were able to identify a huge future liability for, what do we call it? Not so much redundancy, but gratuity payments that, which is quite common in developing growth markets.
Yes.
And I would say that in going through that process, we saved about $15 million of future liability, which we wouldn't have realized if we didn't do the let's say the maintenance to the payroll that we're required to do. But that's not really related to this group of standards. But that was a real win-win, because when you put real facts down that their gratuity plan and the way that the payroll's increasing, if we did work now, we'd save money in the long run. That is a real strong business case. And that gave me credibility. And I think that having that kind of credibility means that I could come in again and make secondary recommendations, and people would be willing to listen to me. And maybe that's not an example based on the standard, but that's something that I see the standard doing for HR people. It's positioning them as an influencer in their organization. I'd like to see more people at the board level who have a HR background. I'd like to see a future where, we're not talking about executive comp committees or audit committees. We're talking about human capital committees. And the person who's chairing that is your HR CHRO or HR VP. And they're sitting there from a point of view, they're talking the same language as the board. They're talking same metrics and net present value statements that maybe the CFO is talking about and the CEO is talking about. And the board is concerned about, but they're talking it from a human capital perspective. They're putting real data into their business cases. And then once they're able to prove that there's a saving or that there's a generation of income by, maybe the board is going through a difficult time and they want to do a hiring freeze. And the HR CHRO can say, look, a hiring freeze is actually detrimental to our organization. Our people are actually generating revenue for us. We look at one of the metrics in the standard, it's called human capital return on investment. That tells you a percentage figure. So let's say, for example, it said it was 30%. That says for every pound or dollar that you invest in the organization, you're getting a $1.30 back. So, it's putting a value in human beings and human capital so that we start looking at them as an income generator rather than a cost center.
Well, and think about how different that is from it will die very hard and long, the headcount mentality, right?
Yeah.
The headcount mentality just assigns a value or an expense based on a position, not a contribution. And it's just unbelievable that here we are 40, 50, 60 years later, that's still, our vocabulary in the workplace. And so, as you say, that one of the benefits of these standards introducing different ways of thinking about, some of the principles. And you said something earlier on too, that I thought was really insightful. And it's not just about sort of what's in a particular standard, but the principle of standardizing the fundamentals of human resources, human capital, people operations, whatever you call it. The basics aren't basic. And I think that's what gets lost a lot in some people and sort of academics sometimes, is there's this fundamental assumption that the basics are working, or assuming the basics are working fine, then you get into these sort of higher level maturity type things. And I don't know, I'm a 20-year HR practitioner, and I've never worked in a single organization where the basics are working as well as they could be. And if you get those right, the bottom line, the productivity, the engagement benefits to the organization are significantly more than some of these more esoteric sort of ideas that people have. And I think that's part of, bringing back the insight, the business intelligence. That's one of the roles and responsibilities of this project. And I wanted to capture something from you too, as well, that I also hear a lot of questions about is, when you talk about the stakeholder community, in the most concise way, what's in it for stakeholders? In one or two sentences, how do you make the case when there's been so much resistance by so many stakeholders, including people working in HR themselves, to this idea of standardizing their work? How would you address that?
You ask a very hard question to answer.
It is hard. I know.
I just explain why it's a hard question, because there's so many stakeholders in here.
Mm-hmm.
And each of those stakeholders have got different perspectives. You've got the employees, you've got the investor community, you've got externally academics that are looking to train future HR leaders, etc. You've got future employees are looking at your organization. Why should I work there? So what does having more transparency in all the human capital data bring? And to summarize, I would say, it's the unveiling of previously hidden information. It's that's the information that's been restricted that relates to human activity. It's providing clarity on an organization. It's putting a different kind of lens on an organization that we haven't really had up until now. I mean, I take my own example. I I have taken on several senior jobs before. And in that later year career process, I've looked at the company reports, part of my preparation for the interview, you know, looked on their websites, look at the company reports, look at the board meeting minutes if they're available, etc. And I've tried to screen through what kind of company is this from a HR perspective. I've seen how many headcounts, I've seen where the issues are. Maybe they've had a strike action they've had to declare. Maybe they've had a loss of life in one location, specifically in the oil and gas industry. That's something that is material and it's reportable. But I hadn't really had a feel of the organization until I've walked through the door and spent the first 3 months there. I don't know how toxic or helpful the board is, or how the leadership team, how effective they are, what's their history, what's their background. I don't know which parts of the organization are doing well. And I have to spend some time, first 100 days, let's say, really getting to know the organization, meeting, talking, pressing the flesh, getting to know. Then I'll know what they look like. And one thing I do is HR people love data. And what really frustrates me about this is we love data. This is all about data. If I said to you, hiring blue-eyed employees is going to bring you better recruitment practices, they would want to see the data behind that. The standard is all about data. And one of the first things I do when I go into an organization is just peel apart the payroll, because that's a really good source of data to see where the anomalies and the outliers are and who these people are, what's their backstory. If I had this series of 58 metrics with 3 years worth or more years of historic trend analysis, I could start to look at what is normal for my business, what is the kind of ethos. I could look at where I should spend my time to generate the best results. I could see if there's any fluctuations in the organization. I need to intervene. I mean, employees are watching HR professionals and finance professionals, and they're expecting us to have this eye on the pulse here. We have all the closed door data, but sometimes we just don't. And we might spend 2 years putting in place a talent management system or a graduate recruitment program, and we start saturating the workforce with new skills and new millennial workforce. And really we don't realize that all of our knowledge is retained in a different generation, maybe a senior group of employees, and they're all walking out the door because they're feeling left out. And meanwhile, your business is failing and you don't understand why, because you've been working so hard. And the other aspect to it is every HR person, director level, or should know what the organization looked like when they arrived. And then they should be able to say, look, I did this. This is the data. How do we know how you were successful in that organization? Well, you've got to have a starting point set of data to know where you started and show that this has actually had a material impact. Like we go back to that human capital return on investment. Imagine if you started and that was 30%, and by the time you left, it's at 90%. That's something to be holding forward. And I'd like to see a future where HR people are.
Well, I want to qualify one thing that you said earlier, Karl, because I don't think it's actually the commonplace. And you said that HR people love data. I don't think the majority do. I think the better ones do. I think the good HR people like data, and the not so good to average to below average don't, because that's a form of accountability. And if you think about it, for years as an HR person, your accountability, your credibility came from your boss. If your boss liked you, you had job security. You were good at your job. Maybe not. When you have these internal and external benchmarks of metrics to compare, and you can compare industry to industry, apples to apples, oranges to oranges. All of a sudden, like you say, if the return on human capital goes from 30, 40% to 90% under your stewardship as the CHRO, man, and how do the sort of brands of CHROs get found now? Well, where did you work before? Oh, you worked at this company. You must be good as a head of HR. And time again, I don't know about what you've seen, is these people move from one organization, they go to another, and it's often a disaster. Why? Because maybe the organization had some sort of, capabilities, institutional know-how, competencies that were, transcended the HR function. And that person was kind of a bystander. So these metrics, these types of standards, the more they become, for lack of a better word, standardized, I think people who are good at HR are going to just, buy into this, but I don't think that's, where the majority are right now, Karl. I think people like you and I wish it was the case. And I think that's part of the reason why this movement is gaining such momentum globally. And I don't want to speak for you, but as long as this process may seem to be taking in the past year, wow, in the past 12 months, how much has happened, how much has changed, how much the narrative has changed globally. And I think, in the next 6-8 months, we're going to see more of it, the focus on these types of issues. What do you like about, specific to the human capital reporting standard itself? What are some of the things you like, and maybe what are some of the things that you would look for in, the next iteration in terms of improvement?
Well, look, I like that it's a consensus of 58 countries globally.
Nice.
You know?
Nice. Yeah.
You try get in any organization a policy that's going to cover 58 locations around the world, and we're talking about a lot of Western organizations, but there's Pakistan and Nigeria, South Africa, Australia, Canada, US, they're all agreeing with the same set of metrics. That's amazing. That's, for a first pass at the standard, that's one of the main wins.
So true.
Now, there's a lot of detractors from the actual final standard. Well, I've been in union meetings that have lasted 24 days. And, at the end of the day, we're just happy to not have a strike, and we have some kind of memorandum we can come out with. And I feel like the main achievement here is that we have a memorandum, and every 5 years the standard has to go for a review. Where could it be better? Well, there is, even as a trainer, there is some things that I still find confusing, and I haven't, even though I have access to the people who are chairmen of the actual people who created it, I haven't had the chance. So Neil McCormick is the current chairman of Working Group 2. I talk to him a lot, but I haven't asked him this question yet. So for me, one of the questions is like employee bench strength is a metric in there that talks about critical positions, competencies to assume immediately a role that's vacated, that what is your bench strength. But then later on, it talks about succession planning and how many of your employees in critical roles are ready now. And I feel like those are the same metric. So how are they distinguishing? So, there's clarity required around things like that. In the UK, we have CEO pay reporting ratio requirement. And the UK government does an excellent job of talking about, we've got to report the CEO's payroll versus the rest of the medians, the first quarter of the median, the 50 percentile quarter of the rest of the organization. And then they go into the detail of saying, well, what if my CEO just started halfway through the year? Do I use half of the other CEOs? What if there was a gap of 3 months? When do I have to report? When do I don't have to report? That granular detail is missing in the standard. Even though there's been technical specifications recently released, it doesn't go to that nth degree. So I would like to see more clarity around that kind of thing. What ifs? What would you do? The other thing is I'm really about beautiful aesthetic documents, and the ISO, I will make my money out of training on it because it is a very complicated document, and so often it has formulas in the main standard that's maybe slightly simplified in the technical specification. It'll talk about something and then it'll show a completely different image on a chart, and then the appendix will be slightly different. And it's a bit confusing. You really do need to have someone to guide your hand through it. So I'd like to see in the next iteration some of those ambiguities clarified and make it a more beautiful document. What are the versions of time to hire? It's not just about certification. It's almost like a people health check. You look at the 58 metrics. We talk about the full internal stuff. 58 metrics. Most of them have a formula. That's the beauty of the standard is, we're comparing this using the same methodology for full-time employee, FTE. We're defining that. We're talking about this is the formula for time to hire, etc. Things like that, But if there's 58 metrics, let me just say I'm putting my money on the 64, maybe 65, if you look at some of the technical specifications. Each one of them maybe have 2 to 3 bits of data that's required to create a formula. So now we're talking something like close to 150 data sets. Now, if you compare that over 3 years, now we're talking about 450. Let's round it up for 500. Okay, and if you're looking at different geographies, different business units, looking at male versus female, different gender profiles, if you're looking at different hierarchies in the organization, so different cadres of employees, service versus professional versus managerial versus board, then that data points that you're needing to collect and organize is coming up to like 5,000 plus. So when you're trying to collect 5,000 bits of data that's equally agreed between finance and legal and HR and HSE, that's every business, if you can say you can do that, you're doing really well. You know, that's a really mature organization. So it is a bit of an audit or a health check of your business. So you'll find out what you can't do. So some of the things that the standard requires is that you have a method for capturing your internal audits and external audits. You are able to have an employee census survey in the organization. So some organizations might not be doing that. So they might have to go through a process of putting that in place. You have to have a robust succession plan, really. It's not just going to be good enough that you've got a line on your appraisal that says who can do my job and are they ready now. You know, you really need to have.
There's so much. I mean, I wish we had more time to go into this, and I'm sure maybe we'll find another session to sort of unpack some of those specifics. But you said something at the outset of your comment that I think is essential for people to come to appreciate. You know, I like you, when I saw the final document for human capital reporting, I read it and I said, you know, this is not the most beautiful document I've ever seen, right? It's not. It's you really have to be an HR geek, you know, to sort of make your way through that. But that said, the power of consensus, Karl, you know, and I can't emphasize that enough. You know, these documents are born universal. And if anyone's ever worked across international borders or different divisions in organizations and seen the challenge of getting people just to agree to terminology, to agree to sort of common vocabularies for things. And again, people might say these are semantics, they're small details, they're not the big details. No, they become the big details. Because if you don't get the basics right, you know, you're building a house of cards. And for my 20 plus years as a practitioner, I've seen so much advice come into the mainstream about how, global best practices, however you want to frame it. And organizations aren't doing sort of the fundamentals well, many. And the ones that do it well, they explode. They are so powerful in their business models. And I think that's something that this project is going to emphasize, and I did a class with some students a couple of weeks ago, and it started to introduce to them to the main categories of the human capital reporting standard. And I really rhetorically put it out to them. And I said, how do you think this is going to change business? How do you think this is going to change the way people do work and people operations? And they very quickly came back to me and said, well, once people start to use this, it's like a snowball or a cascading effect, is that you're going to start to look for comparables. You're going to start to sort of say, what did the other organizations do? Because you can now start to compare. And I know there's some, grayness and sort of, we're dealing with people. We're not dealing with pure numbers or theoretical physics. And so we're not dealing with absolute numbers. But when you have the consensus to work within sort of some parameters to define things as measures and metrics, the power that has is so underappreciated. So, Karl, we're in our final minute or so here, and I just wanted to capture your sort of final thoughts in terms of, what do you see as the future of this? How, in 5 years, how is this going to change the world of work?
Well, that's the big question. Is this going to be Betamax versus VHS, and then along comes DVD and online streaming? And
right.
It's a very busy space, and there's some competing value systems out there. And right now, on everyone's mind is ESG, the main sustainability frameworks, and everyone's competing for this set. And you'll probably talk about with some of the other interviews, but the SEC's ruling on human capital disclosure is principle based at the moment. Maybe they'll start prescribing metrics to be used, but I'd like to wake up in the future and find that this is a common kind of basic part of your analytics, and you've used it to start with, and you've moved forward into more predictive stuff, and you've added a whole suite of things that are applicable to your business. what I like about the ISO standard is it is very comparable with a lot of the other standards out there. So, you know, in the future, my children will be looking at a business and saying, you know, I want to live in this area and I could go work over here for this company. They don't pay as well, but look how well they train and look how well they retain their people. I'd like the happy life. So as my millennial children, or whatever they're going to be called, they're going to say, I'm going to go with that company that's got less money because they treat their people well. Or the other person that's like really about making money, they're happy to move into a maybe toxic work environment, but the salaries are so much higher. And that's changing the way business operates and sell themselves to businesses. And that's how companies, and, you know, I'd like to see that the current EFT funds that are out there that are sort of thematic around human capital and around gender lenses and around ESG, that they're successful. So that it's proven that, you know, if you value your people, your organization will outperform its peers, and it's a good value investment. That's the future I'd like to see.
Well, I think it's a step in the right direction, you know, and I think it's a big wall in front of us to hurdle, but you know, with the SEC's requirement at end of last year for reporting, as you say, it's principle based, but it's a step in the right direction. And we are sort of pushing the limit of our time. So Karl, I want to, on behalf of my colleague Fahad and myself, I want to thank you for your time today and your insights, and for supporting this project and all of the work that you do to make this vision that we all hope for, not just our children, but for our you know, our second half of our working careers comes to fruition. So thanks again, Karl. Appreciate your time today.
My absolute pleasure. Thank you both.
Cheers.
Cheers.